Hello, everyone. Happy Thursday. End of the week closing in. Hey, John. Good afternoon, Jacob. Good afternoon, Patrick. Good afternoon, Paul. Good afternoon to the people hiding in the background and the people still filtering in. We got Bob on this afternoon. Get your questions ready. This is not going to be a super long live stream. I want to get Bob's thoughts on the PPI and jobless claims. Tomorrow, overnight, European time, we have Bowman speaking. And we got import and export prices. We got consumer sentiment and consumer inflation expectations, the preliminary numbers. Remember, the final numbers come in 2 weeks. But these are the preliminary ones. Then we got tomorrow evening Jefferson and Bullard. And Saturday, we even got Feds cooking on Saturday. So today, Google, Meta.com services still on a tear. Amazon and Tesla. Elon announcing he's just going to be CTO and a bunch of other roles, a bunch of other crap still, but there will be a new CEO in about 6 weeks at Twitter/X. Tesla bumping up a little bit on there. Oil continuing their pullbacks. Breath was horrible today. You see comm services and consumer cyclical, the only two things really up. And then, consumer defensive technically up 20 basis points, but everything else is negative. Fed watch, 88% for a pause, 12% for a hike in June. Fear and greed still in greed. All right, in terms of earnings, after the close today, there was not much. There was not much at all. And tomorrow, there is not much. There's not anything really market moving. Disney getting hammered today. Peloton getting destroyed on the bike recall. New lows in Peloton. So, Beyond Meat just getting taken to the woodshed. All right. With that, hey Bob,
What's up, guys?
how you doing? Good evening, Anissa. Good afternoon, Royal Palms. Let me know again any questions. The numbers mean nothing. The Fed means nothing. Just buy the NASDAQ 5. Well, there you go. Hey, Bob, I did this yesterday. Well, I did it sort
Yeah,
of, and I put it on this morning. But did you look at this? These are from technically yesterday's numbers, but here's the S&P 500
yeah.
with the weighting. Okay, this is weighting. Apple and Microsoft. All right, 14%. So just those two stocks, 14% of the S&P 500 movement. You take the top 15 stocks, it's 34% of the whole index at this point.
Now do the Nasdaq.
I'll have to do that. Well, I will. I will do. I will do. But before I even did this, I sort of said, okay, what are the before we even put this together, I said, let's put up our custom Apple, Microsoft, Amazon, Nvidia, and Alphabet. Then I realized I did the top 5 stocks after looking at it, and that's that custom index. Look at that thing. That is just, but you got the top 5, and what's the top 5? I mean, this is just fascinating to me because the top 5 is nearly 21%. 5 stocks, over 20%, and they've just been, well, so didn't know if you probably knew all that anyways. I just thought it was interesting.
Yeah, no, I didn't know all that. It's what's funny to me is not looking at this stuff specifically, but looking at we're in a situation. We've seen this situation before, and we saw this situation prior to the big downdraft last year. And I had said on this show and others that either the Nasdaq was going to pull the other three up, or the other three were going to pull the Nasdaq down. Now, I think you guys know where I stand on this.
So we
I
should
think I've
buy
said
everything?
it times. I think I've said it enough times here. The PPI was market positive, and we're not up. Yeah, the Nasdaq is up, but the Dow's down almost 0.7%. The S&P is down almost 0.2%. Russell down 0.8%. The regional banks were getting killed again earlier. I haven't seen them in a while. The PPI number themselves, the thing that stood out to me on the negative side was that services PPI went up. It actually was a very strong part of the number, services PPI. What are we trying to see if it's going to ease? Services inflation. Now, in fairness to the services PPI number, it was brokerages that really increased. And it was, brokerages and financial institutions. So that can be traced back to any number of things, including maybe banking fees going up on the regional side, including brokerages raising fees and RIAs raising fees because of the volatility in the markets. But the PPI number, on its face was market friendly. And that's good. I mean, that's fine. We're seeing all kinds of measures of the economy slow, and inflation and prices are going to slow with it. But it's not slowing fast enough, in my opinion. And if Jim Bianco is right, August to July's number, we're going to see it start to creep up again, and that's just catastrophic. So, especially if the Fed is really starting to lean toward a tightening, which the market still has them doing.
Yeah, market still has. What do we have now? I didn't go to probabilities, but we're still at pause, and cut everyone. Every future one through September of 2024 is a cut after this July.
Listen, guys, the best piece of advice I can give you, looking at the screen that Mike has right now that he just got rid of, is if that happens. You don't want that to happen. You don't want that to be the case, what Mike has on the screen right now. If that's the case, things are really bad.
Things are unraveling quickly.
Yeah, they're really bad if that's the case. If these guys just hit their final rate hike, and then two meetings from now, they're going to unwind 60% of it, 70% of it. That means things are really bad. And that's really all I got for you guys. I mean, it's the end of the week. How was the volume today, Mike?
The volume? Yeah, I'll put it up right now. Not as high as yesterday. It was sort of lackluster on the S&P. NASDAQ still had decent. I mean, yesterday's was huge. Yet today's is decent. I mean, it matched the sell-off days from last week.
Yeah.
But this, the mere fact that, and I put up, I don't know if, I put up yesterday the RSP, which is the S&P 500 equal weight ETF, and you can see the major difference between, have you looked at this one, Bob?
No.
So this is the equal weight. And you can see from after the highs in February, much lower, and can't even break above April's highs, not even near them, versus the S&P 500, which is, the cap-weighted stuff is holding up near Feb's highs. And if you look at the NASDAQ also, the NASDAQ, which we know made new recent highs, but the equal weight NASDAQ 100 equal weight, not. It's off it's off substantially from its Feb highs. So
it's been really difficult, no matter how powerful is not the right word. No matter how strong the big three, big five get, that they're going to be able to hold up the indices for very long. Again, we had the same condition prior to the sell-off last year.
Yeah, and also if they start rolling over, because they're by no means cheap, they start rolling over, just trading more sane valuations, they can drag everything down. But until that happens, NASDAQ up 27 basis points again today, just chugging along. Although
we recorded the podcast a little while ago today, and we had Dave Cullum on, who's a pretty popular guy on Twitter. He's a organic chemistry professor from Cornell. but he's also very active in the markets, and he's a big conspiracy theory guy. So it was a really fun podcast. He talked about MK Ultra quite a bit, Mike, which was kind of fun.
Oh boy, you're gonna have to send me the
I'll send you
pre-edit
the
ones.
I'll send you the pre-edit version. But which, by the way, you guys should know we don't edit much of the content at all. But Mike likes to get it before everybody else, so he gets it. But he said the markets by his models are a little more than 2x overvalued. And he says that you're buying things at certain stocks you're buying at 100 times earnings. You're never going to make more than 1% over the long term a year.
Well, I forgot who brought it up yesterday, but look, AMD, okay?
Mm-hmm.
P to E ratio 402.
Oh my God. Where do you
I
see
mean, that
that?
makes Nvidia at only, and even at a growth Nvidia at only 165 is a relative bargain. But these are well established well established companies. Not they're technically growth stocks, but not at 400.
He also said that I thought was really interesting. Oh God, I'm going to misquote him because I'm clearly tired. But he said one thing in his research that is always mean reverting is multiples. He said if you go back, like from the 40s all the way to the 80s, it was 3% a year multiple growth. And then it exploded. He's like, and if we ever mean revert, which we should, he goes, you're going to be talking about very unhappy stock market stock owners if we mean revert to that, because you're
Yep.
going to have something that's 100x, like you just pointed out. It's not going to make money for 20 years. Anyway,
Nice. Any thoughts? Copper, big sell off today. Copper and silver both.
so the overall markets, when I look at like my market watch screen, it very much, again, this is something else we saw before the big sell-off last year. People are hiding in big tech, and they're not hiding in the typical flight stuff like gold and the yen. They're hiding in dollar-denominated treasuries and big tech. And that isn't going to end well. You saw the dollar stronger today, despite yields much lower.
Yeah, dollar
And
was.
that's flight to safety, right? That's flight to dollar-based assets, right? Yields were lower, the dollar was stronger, so that means the yields being lower means treasuries were being bought, and the big five Nasdaq were being bought. So that's a dollar-based flight to safety. So, and gold, honestly, gold, when you look at a gold chart, to me, gold's holding up nicely. I mean, yeah, we ended up selling off a little bit today, but you're basically just back down to levels of about 6 days ago, right? And it's nothing catastrophic here on the gold chart. Certainly feels like it might be rolling over short term, but this kind of a flight is a flight to dollar-based assets. And I think people are trying to buy the hell out of cash treasuries to get as high a yield as they can because they don't think there's any chance yields stay here. So it's buying yield and buying big tech. That's what I think it is.
Hey, feedback has a question. Left field macro question. When will the U.S. face the music on entitlement spending? Taxes would have to go up 40% tomorrow to maintain current standards given demographic projections.
So I'll tell you feedback. Dave touched on this. And he said he was telling some students, because again, he's a professor at Cornell. He's like, your future seniors, he goes, it's not that far off. You'd be surprising how quickly going from college to being a senior citizen comes. He goes, you guys are getting zero. You're going to get nothing, absolutely nothing. And you better plan for it because you won't get anything. So Dave Cullum thinks it's about 20 years that they can survive at this pace. He said, but he hopes they do something about it, but he doesn't have real high hopes, and honestly, neither do I. I mean, the fact of the matter is the debt right now is about $2 million per taxpayer. That's where we're at, about $2 million per taxpayer. I have not put that money aside. I
You
don't know if
didn't put
anyone else.
aside your 2 million?
I didn't put aside my 2 million to bail the U.S. out.
Oh, you're
So,
selfish, Bob.
yeah,
Am I
it's
gonna have to
ugly,
cover
Peter.
your share of it?
Most likely, yes. I'm just going to default. I mean, that's what I'm going to do. I'm going to default.
Oh
I have
well.
not allocated those funds.
Well, I haven't set aside an extra 2 million, so I don't have that earmarked. Can I just do earmark? Jeez. Yeah, it won't end well. Oh well.
Nope.
Oh well. Uh, any other? Let's see. We covered metals. Any other thoughts? We got finally a couple day pullback in crude from the daily rotation zone. Any new thoughts on crude?
No, I mean, pretty much everything you're pointing out right now, Mikey, is all falls into that flight to safe dollar-based assets. Yields in the treasuries and big tech. That's it. Not everything else is being sold off. Everything. So, I mean, you pick your sector, pick your futures contract. I don't have much more to say. This is all slowing economy stuff. That's what this is. And again, a very small sector of the community of the world, of the investing world, believes that big tech won't suffer. And it will. It just did a year ago. Literally a year ago, big tech collapsed with everything else. So I don't know. I don't know.
Well,
The
we shall
overall market
see.
here looks really vulnerable to me.
But are you still on gold, Bob?
I'm still on gold. Yes.
I'm sorry, I had to get that in there before we let you go. All right.
I called that a conviction buy on BNN on Bloomberg Canada the other day. And they asked me, what do you mean? What does that mean? Conviction buy. What does that mean? It means I just bought it. I didn't really have a plan. I'm just hanging on to it. I don't know. I mean, it's a long-term hold for me when something is conviction buy, but it's certainly not something that I'll hold. I ended up saying that a conviction buy means that once I have profits in it, I'm at break even. Other than that, I'm hanging on to it. I don't have a target. But
Gotcha.
truthfully, my goal target was 2,800. So,
All right. Well,
all
thank
right,
you for
guys.
popping on. You have a fantastic weekend. I'll look
You
for
too.
the rough cut of the pod
Yeah.
or the podcast.
It should be ready for me to email it right now.
All right, and you have a wonderful rest of your week and a great weekend, and we will see you next week.
Thanks, Mikey. Talk to
All
you
right.
guys later.
Thank you. All righty, let's just get through some stuff. Tesla, by the way, the double is now a triple. You can see that clearly with an Elon announcing a new CEO turning, and it never triggered, never even confirmed or triggered. So that is off the table. If you're looking for any bearish plays, we still have the overall macro. I'm just waiting for the next rollover play, but the minor thing, the channel's still holding. The S&P, by the way, also did trigger a double bottom. Actually triggered back at the between the 1 and 2 o'clock hour. So 41.54, 41.59, 41.64, and that takes us back to the closing high areas, from this morning's European market. So, gonna be watching for that to potentially play out overnight. So that will be the key area I'm watching. I'm going between about 41.24 and 41.64. That pretty much brackets the market for overnight trading. What else? As we said, NASDAQ, who came up here? Love Mike's comment from this morning. I sense the smell of rug pull. It's just when you get breath stinks. And it's just getting smaller and smaller. When you look at just, it's easy when you look at, just look at the S&P 500 map. And when you see this and then you see just like some mega caps holding stuff up, we don't have broad market support in here. And that's not picking on the market. I mean, again, you got to sort of hold your nose and trail on this. I wouldn't be an aggressive buyer besides intraday stuff if it on continued rallies. But this is where you got to maintain a stop because we could get a sudden and quick rollover play out of nowhere. But until that happens, the only play really is the NASDAQ to the upside. The Dow, not holding up. Dow again down 68 basis points as it's still got 5 minutes till close. Russell still in consolidation, but testing the key support area. But this isn't a strong market. Down 82 basis points. The S&P, besides we could get that rally at least overnight or into tomorrow morning, but still down 15 basis points. Even if we rally it up tomorrow, it's going to, unless we get a really strong rally, it's going to be a very flat week potentially. Remember, next week is OpX. VIX still below 17. By the way, I just saw something go by the 0-day options relative volume was greater than 50%. So over half the options volume was the 0-day expiration options. That's just insane at this. That's another thing I think that's a ticking time bomb. Because you've got people, and generally people have been doing it with calls, but we start rolling over and people start pressing put bets, that can amplify the volatility to the downside and really hammer stuff. So it works both ways, folks. Notes. I'm really curious to see where this ends the week tomorrow, to see if we get a weekly close above this 116.08. Other than that, longer term, still expecting notes to go higher. Shorter term, we're in consolidation. As Bob mentioned, dollar index, that's why I have this trend line. The next key area is the defining point and the 50. Then we start getting a close above that. I'm watching for an extended possible run in the dollar index. I know some significant people are bearish. But watching for a bottom, we had the potential double, which never triggered, turning into a triple. But I'm still watching for a bottoming pattern in here. We got longer term cycles. We could get a few weeks of up move in the dollar. So that's really it. We didn't put up silver, but silver, oh, by the way, this is a valid little double top. This is valid. Gonna watch, especially if it closes down here tomorrow. You can see it really nice on the weekly. Next key target, 2368. I'm seeing if this will trigger on the weekly though. But actually closing right at the 50 today. And you don't have a clear path move on the daily, but there's very few great stopping points. So this could be, now it's going into the weekly rotation zone. But look even at the final target. You do have a clear path on the weekly, and the final target's right in front of the 50 week. So we could see some, with weekly cycles at the top and rolling over now, we could see a few weeks of downward pressure on silver. Do not ignore that. So if you've been long silver, at least have a game plan if it does continue an extended pullback. Is this a double top from end of February to here? It's not reversing enough of a move. You see here? So what am I mean, this is still a major point. Just remember this point right here. this low from March. You don't need it to be a double top because you get a close below this low, this 38.39.25. First primary target is 35.93. So we don't even need it to be a double. Just watch. Just watch for that. Before that, we get a close, and this is on a weekly basis, we get a close below about 40.60. That's my early warning sign that we could start be getting some serious downward pressure. But good question. Good question, Sean. All right. We looked at a few things today. Peloton, brutal. That is just ugly. That is an ugly chart. What else do we have? I told you, if everybody was not in here, but a lot of people were positive on Beyond Meat's earnings. I'm like, these earnings still suck. Yeah, okay, you reported a loss of 92 cents a share versus your estimate of... these numbers are abysmal. And finally, the market had a little realization. Look at how far this has gone. Look at this. Again, this is not something I'd want to pick a bottom in. But look, can you believe this was trading up above two? What was that? What was the high here? Oh, geez. 239.71. Now it's trading 10.20. Whew. These are things I would not try to call bottoms in these yet. Netflix. Netflix is closing in on key resistance. Nothing's really changed from before. Got a pullback. And it's still overall, though, in sort of this big, ugly consolidation pattern. But short term, I'd still watch for some potential follow through to the upside. It's just now getting overbought with cycles at the top. Weekly cycles are at the bottom, so I'd be watching for at least some very major resistance around this 350 level again. All right, that's about it. Thank you for tuning in. I will be back tomorrow morning at 8 Central, and we will wrap up the week. So everyone have a wonderful night. Let's see. Pavneet, Mike, I have a considerable Microsoft. I am thinking of selling 350 covered calls and using the money to buy a 300, 200 put spread. Would that be right? Well, I can't comment exactly. I mean, you gave me a fair amount of information. Let me look at the longer term stuff here with Microsoft. I think of you selling 350 covered calls. I think that's a pretty safe bet with that strike price. I mean, you're almost getting into an area even up here. It depends if you want to hang on to the shares or not. I mean, I like to personally sell covered calls when you were getting to weekly cycle tops again with very overbought against like these 315s, 320s areas is very key. There's a lot of resistance well before the 350. Not giving you specific trading advice, but that's personally what I look to. But if you want to go to 350s, the major all-time highs, you're pretty safe there, I think. I mean, it would require massive, again, it depends what month you're selling to, and buying a put spread 300, 200. You know, selling covered calls, I don't have a problem with that trade at all. I think Microsoft, again, is getting way ahead of itself. Once this market, I mean, it's not a bargain. Yeah, it's still technically, it's a more of a stable growth stock, but you're trading at P/E of 34. You hang on to stuff too. You got dividend. Ex-dividend date is the 17th. So yeah, I don't have a problem with that kind of thinking at all. If you want to hang on to the shares, protecting yourself with a put spread. So and using some covered calls. So yeah, that could be a nice little strategy. I mean, you have you see here on the daily, some major prior support becoming major resistance up in here. So it's going to take a lot for Microsoft to chew through that. Also, it's getting overextended from your weekly rotation zone. So I'd be watching for a topping pattern, on the daily, a more substantial topping pattern on the daily, and then, possibly setting up what you're thinking. Good question, Pavneet. You're welcome, Paul. All right, but that's the way to think. I would think personally. I am thinking anything to the upside is just a trade, not an investment at this point. I am also thinking very, very defensively going into. I think there's going to be something that hits, whether it's expected, unexpected, but I think there's going to be that rug pull. So at least having that in the back of your mind and thinking, all right, from a portfolio perspective, if we do start getting some significant downside pressure, how do I want to protect myself in my portfolio? That's another thing. Also, keep in mind if you want to look for overall portfolio. I mean, so many people are ignoring the VIX, but the VIX will pop if we start getting major downward pressure. But look where you can buy protection, because on a spike, I mean, your spikes will come. So if you're looking for some portfolio protection, there are ways to play with some options on the VIX you can look at. Because it's some cheaper, especially if you go out a little bit, it's some cheaper protection possibly. So that might be something people want to think if they have a substantial portfolio they want to hedge. All right, with that, I will talk to everyone tomorrow. Thank you for tuning in. Bye for now.